Good morning, it's Harvey Jackson. Just going to get through some news items. Quite a bit's always happening every week. It's just amazing. So the StatsCan put out a report on Friday early, and this is the numbers that I kind of drove into. You can see here that they added dockage in the tune of like 300,000 metric tons of dockage, or it could be seed production as well because they have feed seed dockage. But I'm going to say it was dockage, and then they adjusted the exports slightly as well, but that made a big impact on the carry into this current crop year of nearly 1 million metric tons. And I will contest to say that 1.6 million metric ton carry out is probably a bit too small for the fact that the canola crushers, and it'll be even bigger going forward, are crushing near 1 million metric tons a month right now, and that would suggest that the farmers only had 600,000 metric tons carry out in their bins. That's not usually the fact, but as production increases on the processing side, that yeah. Anyway, we'll just let that play out. But I also in here just have a suggestion that there could be 5 to 6 million metric ton increase in acres, and using the crush capacity utilization here at 91%, and you can put any number you want in here. But at our current crush at 12.6 potentially, and our current exports of potentially at 7.5, adding another 2 million metric tons will get us up to 14.5 million metric tons of potential for next year. So we'll have to see how that plays out. So this past week, we increased our crush capacity utilization, went up to the 92.2%. We're 6.2 million metric tons crushed, but we're still 1.9 million metric tons behind. So we had this position on way back in January, and then we were looking at adding, or just added, just this last week, another short, but on May futures. And this is how the structure looks. So you enter short at 675. You know, market's trading above that just slightly right now, but if it gets to 603, it's an exit strategy to take profit. Brazil's soy harvest speeds up to near 17%. This is put out by this Patira Agro Negros consultancy group. So this is their harvest percent, and they are almost twice the, or 5-6% above last year as of Friday. Here's your wheat trade idea. So you're just looking at entering in at the bottom end of this trading range and exiting at the top. Canadian manufacturing recession enters its 32nd month. So you can see the real GDP. US is black and Canada is red. And this is pretty telling. You can see since COVID, their GDP has grown, and manufacturing as a share of the Canadian GDP has been falling since 2000, basically. Not a great story at all. Canada economy lost 25,000 jobs in January, and the unemployment drops to 6.5 amid shrinking workforce, less people looking for work. Andrew Sazov put this out, and he's just talking about the protectionism that India has to prevent some of the what is expected to be bullish, or it seems to be bullish, U.S. rhetoric on soybean oil. It's not likely to get there, especially if Argentina and Brazil are that much cheaper for supplying that product. There's another article just talking about China and the trading group McCusker, and just how unlikely I think it's going to be that trading group is actually going to trade as a group. I think they trade individually with China, but as a group, they're not aligned with the methodology or just the social aspect of China. Quick look at the weather. Cold in the east. Not the prairies have finally got a little bit of a break, but it looks like farther north is still not through that as well. But still talk of the cold in the east. Moisture. It looks like it's going to be hitting some of those drought areas. This is just a comparison of the precipitation anomalies expected in the next 7 days. Looks like we're going to get some moisture in the Argentina area that is deficient. So this is just the soil moisture, and of course the Argentina first season crop where it is. So just quick look at the market. The canola is at trading when I took the snapshot at $1.30 above, trading at 662. Rapeseed is down $1.75 at 486. Soybean oil is up 1.6% at 56.22. Crude oil just slightly up at 63.77. Soybeans down 4.5. Wheat is down a half a penny, and your spring wheat or your hard red winter and your Chicago wheat are down 3.5 and 2 respectively. Oats just down a quarter of a penny, corn down as well, and the Canadian dollar is basically unchanged. So what I did here is just since the January 1st, have a look at the blue line. That's the percent increase in the soybean oil. So that's soy oil, and canola priced in US dollars. And it's increased by 9%, where the soy oil is increased by 15 or almost 16%. When you look at the canola as it stands, we're getting up to that 200-day moving average, and that's when I look at the signals on here, this is a good signal to look at making some sales. You can see it looks like we're getting oversold in that position as well. And when I'm looking at this is November contract, just how the setup is, and that takes us back to all of those that timeline basically on the highs. Your European rapeseed, the highs that were made all the way back in July basically before you can see that. This is just the daily nearby of the European rapeseed priced in Canadian dollars. This is when you saw the export market of soybeans at its high. You can see even in the spring or in the fall here, we were approaching the $150 to $160 mark, and now we're only trading $124. And if I actually look at the actual May to May, it's only about $112. And that's the price differential between the European rapeseed and Canadian canola. There's at those values, it's not as likely that they're going to be strong buyers of Canadian canola into Europe and not finding its way to get across to Vancouver, or even the freight to get through the complicated rail system in Ontario as well. Soybean oil futures, nice rally, and that's what we're talking about, taking us all the way back to July values soon. Crude oil down slightly. You look at the Canadian dollar, kind of wavering here. It really did nothing with the labor numbers, and the U.S. is faltering a little wee bit here as we talk as well. Gold futures back about that $5,000 an ounce. Silver back to its values that we've seen in late December and early January. It still had that fantastic run down and big drop down. We'll have to see if there can be a recovery back to the $100 mark. I'm not certain. This is just how the Minneapolis wheat has been kind of trading in this range, and it's just putting in just chart patterns, and chart patterns are suggesting that there's some upside once we get maybe off the bounce here. Same thing with spring wheat or the hard red winter wheat as well, and the milling wheat. Corn futures still, it looks like we're going to continue to push here a little bit higher. Hopefully we can. Meats, there's an announcement after the market closed that President Trump is going to try to get some arrangements from Argentina, and that is very likely to push this market down on the live cattle and the feeders, I would imagine. And if that goes down, pork is very likely to go down as well. That's all I have for you. USD report tomorrow.